Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, October 21st, 2019, and we are in the first trading day of the week and the last trading hour of the day. As I mention each day, I believe that the prices that are as close to the close of the day are the most valid prices. I'm primarily an end of day trader. In my opinion, during the day, you have the algorithms, you have the day traders battling it out. I believe it's a lot of noise. At the end of the day, you have the market makers, the large financial institutions come in, take control away from the market makers and the algorithms. And in my opinion, those are the most valid prices to make your buying and selling decisions from. So that is why generally I wait till the very end of the day to make my trades. So today we're having a nice day. The Dow is up 42 points. It's up 0.16%, not too much. NASDAQ's having a good day. It's up 69.86 points, 0.86%, and the S&P is up 19.5. 0.65%. So yeah, all in all, nice green day for us. Let me just make sure everybody can hear us okay. Yes, Marco, hey buddy, how you doing, sir? Good to see you. Marco says, I just listened to your interview with Christopher. Oh, good. Thank you. I appreciate that. Yeah, I uploaded a couple podcasts that I did, one with Christopher, 10-minute trader, and how to trade stocks and options, and then I uploaded the other one with Alpha Mind, the Alpha Mind podcast as well to Twitter. So anyway, I've got a good podcast to recommend to you guys today. It's Stephen Burns. He was interviewed by TrendSpider, so I have the links, and I'll be putting those up in just a minute. So thank you for coming, Marco. Hope everything's going well over there in Europe. So all right, and I do want to just thank everybody for coming, spending time here, investing your time, listening to this podcast. I hope it's helping you with your trading. I hope it's helping you with your, investing the way maybe that you look at it, keeping your losses small and giving yourself the opportunity for big wins. Yeah, I hope the time investment is paying off for you in one way or the other. So anyway, all right. Well, listen, the plan for today is, first of all, we're going to go ahead and run the U.S. legal disclaimer. And then we're going to come back. We're going to take a look at my current positions. We are going to talk about when I bought them and why I bought them. And most importantly, how I'm going to manage them going forward based on if they go up or they go down. After that, we're going to do a few minutes on trader psychology. I like to touch on this each day. Controlling your emotions in trading and following your plan all comes back to your emotions, and managing those emotions are the by far the most important skill that you can learn in trading. So I do like to talk about that each day, and hopefully it will rub off. You're going to internalize it and really realize how important it is to manage your emotions. You know, when the stock market's going up, that's great. That's the fun time of the of trading stocks. I wouldn't say you learn a whole lot. You learn a lot when the market goes against you, if you have a string of losses, if you have a drawdown. And that is when you're going to be put to the test as far as whether or not you are going to manage your emotions and you are going to follow your plan. So we're going to touch on that. After that, we're going to go through my watch list. We're going to go through each stock in my watch list. We're going to take a look at all the support and resistance levels. We're going to take a look at technical indicators, the way that I view trading and the way that I view support, resistance, technical indicators is I look at them as possible groups of buyers or sellers. And, you know, if you want a stock to go up, you want to be in the company of other buyers, right? It's obvious. And the more buyers that you can be in the company of, the more likely it is you're going to have a profitable trade. And so, if I look at indicators as groups of buyers and I want the most buyers possible, then I want to look for a confluence or a combination of indicators coming in at the very same time, and I believe that gives me a better chance to make, to have a profitable trade. So that's what I'm going to look for. We're going to go through each stock one by one. We're going to look for a combination or a confluence of signals. You know, I look at moving averages, I look at MACD, I look at ATR channels, I look at RSI, and ideally I'd like to see all of those line up. right? So that's what we're going to do. And then at the end of the day, then if I find something in the watch list today, that looks good, I'll mark a few, and then closer to the end of the day before the market closes, I'll go through them each again, those candidates with a fine-tooth comb, and make a decision whether or not it's a good trade to take. And even if I have a great trade but I already have a current position, I'm going to have to factor that into the equation. So you always have to factor in, first of all, is it a good trade? Do I already have some positions that are similar to that are correlated? What's my risk to reward? So there's a lot of things that you kind of have to factor in before you take that trade. So that's what we'll do, and I'll explain everything, at least the way that I see it. And then after the market closes, if you have any questions, please let me know. I'm happy to clarify it. If you want me to take a look at any particular stock symbols, I'm happy to do that. If you feel like there's something that looks good for the group before the market closes and you'd like me to give you my opinion on it, I'm happy to do that. You can type it in the chat, maybe put a couple stars by it or something so I know that it's time sensitive. Otherwise, if it's just a general question, I will take a look at it after the market closes. So anyway, I hope that makes sense. And so hang on for about 40 seconds and I will be back. And right after the U.S. legal disclaimer, we'll get started. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, and we're back. Hey Jesse, how you doing, sir? Jesse says, hi Greg, caught your interview with Chris Uhl. Excellent. Oh, thank you, my friend. Appreciate that. Yeah, Chris is a good guy. Thank you for watching. I really appreciate it. Hope you're doing well. Had a good weekend. And so, all right, well, listen, let's get started. First on deck is IWM. I did buy IWM back here on the 15th of October. I bought it when it had the close above the 200. I think the 200 does carry a lot of weight. If it's strong enough to close under the 200 and then over the 200, then it gives me a good line in the sand. If I'm wrong the next day on a closing basis under the 200, theoretically I can be wrong small because my entry was so close to the 200-day moving average, and at the same time on that day we had a MACD crossover. Generally I would not have taken this trade just by itself with IWM closing above the 200 because it doesn't backtest very well, but I did take it because it did close above, did give me a good risk to reward ratio, but at the same time we had a MACD crossover, and like I said just a few minutes ago, I like to look for a combination of those signals, and that was a combination, a break back over the 200 and a MACD crossover. So you can see it's been a nice trade so far. Next day didn't do much. Day after that we hit a profit target or two, I can't remember now. Friday was down, but it recovered, so we kept it. And today we've had a great day. We've hit 2 profit targets. You can see we hit that second profit target right near the very top, so I'm glad to take that off. So we have moved 1 ATR away from my entry, and so at this point I'm going to kick into trailing stop mode. This is not a mechanical approach. If this was a mechanical approach, I'd say, okay, I'm keeping it just as long as it stays above the 200. But this is not a mechanical trade because the break under and break over the 200 does not backtest all that well. If it backtested really well, I may have just gone ahead and used a mechanical approach. But this is discretionary. This was my entry, the break over the 200 along with the MACD crossover. On discretionary trades, as soon as the price at some point moves higher than one ATR away from my entry. And ATR channel is easy to measure. Like here's the -1, here's the -2, here's the +1, here's the +2. These distances are all equidistant. So it has moved more than one ATR. It moved to more than one ATR just today, and we bought it back here. So at this point, I'm going to go into trailing stop mode. And trailing stop mode is going to be either, a close below the previous day's low to the downside. Another option would be a rejection of the third ATR channel. Another option would be if we went up and we hit the 70 RSI level. Here's the 70 RSI level way up here. If it kept moving up without making a close below the previous day's low and rejected that 70, I would go ahead and take it off. Another option would be here's the previous high. If we were to reject this previous high, test it and close below for a false breakout to the upside, I would also look at that as a red flag. So yeah, once you enter a trade, you kind of have to look for red flags. And like I said, if I move more than one ATR away from my entry, I really start looking for those red flags. If it doesn't move more than one ATR away from my entry, then I'm just going to use my initial profit stop loss. So again, if we keep moving up, if I get a close below the previous day's low, I will go ahead and lock in all the profits that I have remaining. If we reject the previous high, I will lock in everything. If we reject the 70, I will lock in everything. If we just keep trucking on up here, the way that I phase out of shares, if we get up to here at this point, I will run out of shares. So anyway, it's up nice today. And like I said, I hit 2 profit targets today. Hey Jackson, good to see you, my friend. That's Jackson, our friend from Australia. Thank you so much for coming by. All right. Jackson and I are going to do lessons as soon as he gets his house situation taken care of. So I'm really looking forward to that, Jackson. All right. The Qs. I did take the Qs back here on the 11th of October. I bought it when we had the 5 EMA cross over the 20 EMA. This is a good long-term back-tested approach to trading the Qs. It's more of a trend trading kind of approach, and so this is completely mechanical. It's mechanical because it is an ETF. I don't have to worry about earnings. So again, the 5 EMA crossed over the 20 EMA. It was not too far extended. Generally, if it gets past the second ATR, even if you have the crossover, I'm not going to take it because generally 90% of prices get rejected at the third ATR channel. So if I, buying below the 1 and the -1 ATR channel gives me some room to move up here. But if 90% fail up here and I start buying up here, it doesn't really give me a good risk to reward ratio anymore. So anyway, I did buy it there. This next day kind of moved sideways. We did hit a couple profit targets. The next day moved sideways, hit more the next day, and today we have also hit 1 profit target. So anyway, as it keeps moving up, I'm going to continue to phase out, completely mechanical. So I'm really not looking for any red flags on this. I'm either going to run out of shares to the upside if it keeps moving up, or if the 5 closes back below the 20, that will be my stop loss. So even if we go crashing down tomorrow, the 5 closes below the 20, at least with my phasing out approach, I have already phased out of probably 10, 16, 26, about 30% of my position already. So if it does go down and we were to have the 5 cross under the 20 tomorrow, the market can't take away what I phased out up here already. And if it does go down, it's going to mitigate my loss because I already took shares off up here. So that's why I'm a big fan of trading, of phasing out. So yeah, nice trade. 1 profit target today, so looking good. All right, the SPY, the famous overnight SPY trade. So if we have any new viewers today, I want to go over quickly why I do this. I do buy the SPY, SPY, S&P 500 tracking index. I buy it each day at the very close of the market. I sell it very first thing the next morning. I do this every day, regardless of technicals. And you might ask yourself, Greg, why would you do that? you look at technicals and analyze technicals all the time, and that is true, but this is based on a long-term back-tested study from Liz Ann Saunders. Appy Spoke Invest on Twitter. But there's two options with this particular approach. Option one is you could buy the SPY each day at the open. So you buy it in the morning and then sell it each day at the close. So buy at the open, sell at the close, buy at the open, sell at the close. If you would have used this approach every day since 1993, you would have actually returned a negative 13.9% return for your effort. However, if you do the opposite, which is what I do each day, and if you buy the SPY at the close, right near the close, and you sell it the first thing the next morning, so buy at the close, sell the next morning, buy at the close, sell the next morning. If you use this approach every day since 1993, you'd have actually returned 634.2% compared to if you did the opposite and negative 13.9. So which one do I want to use? Not really that tough of a choice. And really, what's interesting about this is this means that all the gains in the S&P 500 since 1993 have come from people bidding the price up in the after hours and bidding it up in the pre-market session. So past performance, no guarantee of future results. Of course, that is true, and that's true for any trading approach, no matter how good the results. It's only measuring the past. It has no predictive future. But of course, if you're going to bet on something, you're going to hire somebody that has a really good track record, or you're going to hire somebody that has a bad track record. Which one's the better bet? The one with the better track record. So I do like this chart. It really illustrates what an edge in a trading system looks like played out over time. The key here is you have to do it for the long term. Imagine if you started here right before you had this big drawdown. You would have thought this was the worst trading approach ever. And if you would have had too large a position size, lost too much money, you would have quit. So, the key is when you have an edge, it's going to have some ups and downs. It's going to have some bumps and bruises along the way, but you have to play this for the long term. So always look at trading for the long term. Look at each trade that you're taking is just one of the next 1,000 trades. Shouldn't matter that much, right? You find that edge, you make the trade, you win or lose, you rinse and repeat. So, I do like this chart. It really shows you that no matter how good of a trading approach you have, you're going to have ups and downs, but you have to play it for the long term. And really the only way you're going to be able to play this for the long term is by position sizing conservatively in the short term, right? And position sizing conservatively each day. Personally, the maximum I take is a 10% position size on any one trade. So if I had $100,000, the max that I would take on that trade would be $10,000. That's not my loss. That is just the amount of dollars in shares that I'm going to buy. So, all right. With that being said, I did buy the SPY on Friday at the close, $297.97, and I did go ahead and sell it today at $299.48. So pretty sweet overnight trade. So I will be buying this again today as normal at the end of the day, and then I will sell it first thing tomorrow. So just real quick recap. IWM bought over the 200. Close under the 200 was my initial stop. It's moved up nicely, hit 2 profit targets. It's moved 1.5 ATRs away from my entry, so I will be looking to trail this with rejections of some levels to the upside or a close below the previous day's low. The Qs bought with the 520 EMA crossover, phase out, phase out, phase out, another phase out today. This is mechanical, so I'll keep this as long as it keeps moving up and phasing out until I'm out of shares, or if the 5 crosses below the 20. And then the SPY we just talked about, so overnight SPY trade, nice profitable trade. I'll be buying that again at the end of the day. Hey Kurt, how you doing, bud? Good to see you, sir. It's our friend Kurt. So hope you're doing well. And Kurt, Jesse just got done with their lessons, and it was really, really, really great to do the lessons with them. They were super serious about it, and I know they're going to do well. So if you guys have any questions anytime, you guys please let me know, okay? And hey, real quick, speaking about Steve Burns and that podcast. So this is Steve Burns. The webinar was yesterday, TrendSpider, but I have the link for you right here. It's the YouTube link to It's the YouTube link to this podcast, and I'm gonna put it in the chat right now. So there you go. I haven't listened to it. I just noticed it, but I did want to, I did want it to talk about it. Any podcast with Steve Burns is worth your time to listen. So I put the link in the chat, and it's on TrendSpider at TrendSpider on Twitter. So, all right. And then lastly, before we get to psychology, Steve Burns posted this via at eWhispers, but they put this out each quarter before earnings. And I've really come to rely upon it because it's nice. It shows you each day before the open, after the open, who's going to be reporting. So today, after the close, Ameritrade, Del Taco, I don't know some of these other companies, Logitech. Tomorrow before the open, McDonald's, Procter & Gamble, UPS. So it's a big earnings week. Thursday after the close is Amazon. We have Visa. We have Nokia. Wednesday we have Boeing, Microsoft. So it's going to be a big earnings week. And just make sure, guys, that whether you look at a graphic like this or you check online, if you have positions and you're not 100% sure when they're going to report their earnings, like let's say you have McDonald's and you said right now for some reason you go, oh, okay, McDonald's is tomorrow. Make sure you understand whether it's before the open or after the open, because you might look and see, oh, McDonald's is tomorrow, but you might assume it's going to be in the afternoon. So tonight you don't sell it, and then in the morning they have earnings, and who knows if it goes down. So just make sure you understand when earnings are going to be. Make sure that if they're going to be the next morning. If they are, you better sell it tonight, right? If they're tomorrow but in the afternoon, then you have to sell it before the market closes. So anyway, thanks at eWhispers. I really love these charts. So all right, let me just check real quick, see how we're doing. We're doing good. We're doing good. Nice green day today. So, listen, this is the time of the podcast where I like to do just a few minutes on something having to do with trading psychology, some kind of trading psychology words of wisdom. It's so important, everybody, to get your psychology under control, to get your emotions under control. Like I said at the beginning, when the market's going up, it's not that hard to do. But when the market's going down and you're taking loss after loss after loss, and it goes on for weeks, which can certainly happen, then your reptilian brain comes out, your fight or flight response comes out, and you don't look at things as clearly and as objectively as you should, especially if you're taking losses, even when you're having a lot of wins too, because then you start getting a little bold and you start feeling bulletproof. So, again, I know when you're looking at technicals, you're looking at how do I become a better trader. You spend all this time looking at technicals, putting together your plan, but your emotions are the most important. Your emotions are going to mess you up about not following your plan. So in my opinion, the best way to keep yourself stabilized, not to become destabilized, is to position size conservatively and correctly. Watch out for correlations. And in my experience of 24 years of trading, that is the be all end all. If you don't have too large of positions, it's not gonna turn up the volume on your emotions. So anyway, this is from our good friend Steve Burns, who, as you know, comes into the chat very often. But Steve is great. I consider him a friend, a mentor. He taught me one-on-one for a couple years. Learned so much from Steve. Can't thank him enough. But he has a great Twitter channel, Steve Burns at @SJosephBurns on Twitter. So if you guys haven't subscribed on Twitter, please do read all of his posts. And I think it'll be a good investment of your time. But I really read this. I really like this. Steve says, your past doesn't define you. Your actions today are the best predictor of your future self. And, in regards to trading, listen, if you have had a tough time with trading in the past, don't let it define you. If you've been a losing trader in the past, don't let it define you like, I'm a losing trader. I don't know if I'm ever going to be a winning trader. It's not true. Your actions today are the best predictors of your future self. So, just kind of a challenge to everybody. Get your house in order as far as your trading plan. Get yourself a good, solid trading plan when you get in, when you get out, what your correlations are, what your position sizes are, and follow that plan. Because even though you were in the past, you were a losing trader, it does not mean that from starting today, if you follow your rules, follow your plans, you can be a successful long-term profitable trader if you put your plan together and follow it. So, don't let this stick on you if you've been a losing trader in the past. It doesn't have to be that way. Okay, maybe in the past you were, but going forward, if you get yourself together, get yourself a plan, position size conservatively, follow your plan, that is what's going to help you be a profitable trader in the future. And I really challenge you guys to do that. And the more you succeed in trading, the more you see your equity curve go up, the more you're going to want to keep that going, and the better decisions you're going to make, and the more you're going to follow your plan. So anyway, thank you, Steve Burns. Really like this. Your past doesn't define you. Your actions today are the best predictor of your future self. Okay. Hey Steve, what's going on? Speaking of Steve, there you go. Yeah, Steve, I really thought that was a powerful post, and I appreciate you putting that up there. And I'm looking forward to. I just posted that link that you just did on TrendSpider. I just barely saw it before the live stream started, so I haven't listened to it. So I will listen to that today on my hike. So looking forward to that. And thanks, Steve. Always appreciate you coming by. Always inspiration to me, and I think everyone else in the group. And Steve says Chris Uhl is a great guy. Yes, he is. And I did a podcast with Chris, and I just posted it. It's on my YouTube channel. Hey Murat, what's going on, my friend? That's our friend Murat from Norway. Great to see you. Great to see you. Been following your Zanga. Nice trade, my friend. Nice trade. Up 1.1% today. Can't beat that. That's been a wonderful trade. I know you bought it back here, I think, of 576. So congratulations. That's really, really good. So, all right. Well, let's get to it, guys, and let's go through the charts and see what they tell us, if anything, about today. All right, starting with Apple. So Apple having a big day today. This has really moved up. It's just, unfortunately, I haven't been able to get any kind of entry here. It's just been too high. We were above the third ATR channel, went below. Now we're back above, which is very strong. If you can close above the third ATR channel on a closing basis, that is really strong. And we close back above, it looks like we're going to close back above the 70 RSI, which is also strong. So does that mean I want to rush in here and short? No, it does not. Right? A lot of people, if they miss a big move in something, I think the human tendency is to want to short it because you missed it. And you're like, well, I'll get it the other way. Well, it's kind of tough. It's going up strong for a reason. So just my opinion, but I would try to stay away from that thinking. I know a lot of people that when something goes up strong, they want to short it because they missed it. But I think the better approach here, Apple will have a pullback eventually. Don't know when, but it will have a pullback, and I'll look for the pullback. I'll look for a better risk to reward ratio. Right off the top of my head, a pullback into the value zone with some sidewards movement, the V1, V2 would be a good place to start, but nothing there today. Adobe. So Friday, we closed below the 250-day moving average. Earlier today, we were above the 250-day moving average. And, it's pretty good back test on ETFreplay.com when you close under the 250 and back over the 250. Buy and hold, it returns 755%. Using the under 250, over 250, it still returned 363.6%. So, and it lost, close, just a little less than half of the drawdown of just buying and holding. So, is it a good approach? Yeah, it is. I mean, over time, it is a good approach. It only wins about 24.5% of the time, but the wins are really big and the losses are small. So, with that being said, if it closed above the 250-day moving average today, which is at 267.12, I would consider buying this. If I was wrong, I'd have a very small stop right under the 250. And if I was right, it gives me some nice room to the upside. But currently, right now, it's below the 250. So I'll mark it. We'll come back to it. Advanced micro devices. Big day today, just no signals here. Look how we tagged the third ATR channel. Remember, 90% of prices tend to stall out right up here. That's why I don't like to take trades when they're this close to the third ATR channel. So again, like a lot of stocks I'll talk about today, if we can get a pullback into value, that is where I'll be looking to possibly buy the dip on advanced micro devices. Amazon. Up today is above the 250-day moving average. For me to get interested in Amazon at this point, possibly with the close above the 200, but even then it would concern me because then we'd be up at the second ATR channel. There's a good back-tested approach on trading Amazon with the 5 crossing over the 50. That has not crossed today, but again, even if it did cross tomorrow when we were right up here at the 200-day moving average in the second ATR channel, I think I'd probably shy away. My max on taking a move is at the second ATR channel, and I don't even like to do that. I have to hold my nose and do that. 1.5, I feel a little better about. Right at the 1 ATR channel, that's okay on a crossover, but right now, those crossovers have that 550 crossover has not happened, and we haven't closed above the 200, so it doesn't look like anything on Amazon. I'd really like to buy Amazon back down here at this previous lower RSI. That is where I like to buy Amazon. Boeing, well. Friday we closed under the 30 RSI. Even if it had closed above the 30 RSI, it was not going to take it because it was just an under 30 back over 30. We didn't have any support or a bullish MACD divergence, anything like that. Today we did hit the 6 ATR channel, which is very, very difficult to do. But we're at 2506 RSI. At the very least, I'd have to have this close back above the 30, but now we have earnings here on the 23rd of the day before the market opens. So anyway, nothing right here, but I am looking for some kind of a dip buy here, but it has to be a valid dip buy. What's interesting, whenever you get this sidewards movement, this sidewards consolidation, generally that's going to break one way or the other. We just don't know if it's going to break up, and we just don't know if it's going to break down. But this goes to show you that, small bars lead to big bars. Big bars lead to small bars. Small bars, again, lead to big bars. So whenever you have a consolidation, a tight range like this, it's pretty safe to say it's going to break one way or the other. You just don't know which way, and you don't know when. So nothing on Boeing today. Caterpillar is strong up at the third ATR channel. With my rules, I just can't buy there. And you can see 1, 2 days, we've got right to the third ATR channel and rejected it. So I'd be waiting for a pullback to value. I'd be looking for a dip buy with the V1, V2 entry. Dow Jones. Up today, it is under a 1050 EMA cross, which is good back-tested approach on the diamonds and the DDM. We're coming back into value, which is good. If we can get a couple days of sideways movement and a V1, V2 entry, it would be great, especially because we're under a MACD crossover, but nothing there today. Disney down again today. I'd really like to see Disney come down and test this previous low. If we do, we'll have a bullish MACD divergence. I can already tell from the indicators that will be the case. Get some kind of confluence around the 200-day moving average. I want to be real patient on Disney, but I really think this would be a good setup somewhere right down testing this previous low, going under the 200 and back over. I think that would be a really, really good place to take a look at Disney, but it's not there yet. And that, you know, part of our skill in managing our emotions is identifying where the levels are gonna be, making that part of our plan, and not doing anything until that happens. So nothing to do for me today on Disney, but this is, you know, what I'm anticipating somewhere down in here. Etsy, we moved outside of the 1 ATR channel. We are back in the value zone. Today we are moving sideways. Again, I'd like to look for a little bit more sideways movement and look for a V1, V2 entry trigger, but nothing there. Ford, under the 200, nothing there. If we can break back above the 200, giving us a higher low break back above the 200, that might be interesting. Or conversely, down here, like the 840 range would give us a nice double bottom with a bullish divergence somewhere in here. Facebook, so Facebook. We have a good signal today on Facebook, which is the 1050 SMA crossover that happened today. However, as I was just mentioning, this is a good, valid, back-tested approach to trading Facebook when you get a 1050 EMA cross. But where it is in relationship to the ATR channels, you can see we're about 1 3/4 ATR. We're getting close to the second ATR channel. I just feel like it's too high for me, and I don't like this big bar Friday on the downward move with this huge volume. Today we have up, but on lower volume. So based upon that big huge bar we had Friday, that's one of my filters. I don't like to get in front of big huge bars unless I have lots of other indicators. And then, like I said, we're getting close to the second ATR channel, and I just feel like that's too high for me. So I'm going to pass on this trade. Doesn't mean that if you traded Facebook religiously with this crossover, you know, it's not a good spot. It might just go cranking on up and I would miss it, but that's fine, right? But my plan, you know, gives me discretion, even if it's a mechanical trade, of where I'm going to take it. And right here, right now, I just feel like it's too high, but we'll see. It might go up. And if you guys have Facebook, I hope it goes up. I really do. Five Below, outside of the 1 ATR channel, I'm looking for it to come back in, look for a V1, V2 entry. Gold down today. I'd be looking for, this is the gold miners ETF. I would be looking for some kind of 30 RSI dip on this. Here is regular gold. On gold, I would be looking for a momentum crossover signal, the 5 EMA crossing back over the 20. That would be good. Conversely, possibly some kind of price action down here at the 100-day third ATR channel. Confluence down here, that might be interesting if we had a decent V1, V2 down here. Or conversely, if we go lower, a 30 RSI. All right, here is Google. So Google also had a crossover, had the 1050 SMA crossover. Now, all right, so this one is better. We're just barely above the 1 ATR channel, so it's not like up here, so the rubber band is not pulled as far. Tell you though, what I don't like, you see the previous high we had over here? Few days ago we broke out to a new high, and now we closed back under that high. So this bar here was a false breakout. It broke out over this previous range, and the last 2 days it's tried to hang in that old range, but it has not. And today it's closed under the range. Friday it closed under the range. So based upon that, everybody, I don't like that it's a false breakout. I don't like it. I would rather have it come back down, give me a better risk to reward ratio, come back into the value zone, look for some kind of V1, V2. But again, if you trade Google mechanically with this approach, the 1030, it's a 1030 approach, then that would be your entry signal. And I have no idea. It might just go roaring off, and like I said, I'll miss it, just like Facebook. But I'm fine with that because I have to stick with my plan, and I don't like the price action. I don't like that we broke out to a new high and then we failed. So I am going to pass on Google as well. Goldman Sachs having a great day. We did have the 520 crossover, I think, back here on the 16th. It happened inside the value zone. So this is one I would have taken. I didn't take it because I had MasterCard already, and MasterCard went down and Goldman Sachs went up. But you never know. And Goldman Sachs is in the financial industry, and MasterCard is also in the financial industry. So I didn't want to have too much correlation in one particular industry, but it's moved up nicely. So if any of you took that 520 EMA cross, it's doing well. Don't know if you're phasing out or not, but today would definitely be a phase out day. Probably at least one. And did it get one ATR away from the entry? Not quite. It's pretty close. So nothing for me on Goldman Sachs. I'm not going to chase it up here. Time to buy it was back when the 5 crossed over the 20. But we are outside the 1 ATR channel. So if we do get a move back into the 1 ATR channel, back into the value zone and move sideways, I would take that trade if we had a V1, V2. IBB, looking very good. It also had a 520 EMA cross here and has moved up since then. I didn't take that one. We are above the 1 ATR channel. So again, things are getting a little extended here. IBB is getting a little extended. The way I look at it, I'm looking for a pullback into value. Look for a V1, V2 entry. Intel V2 today. However, I can't take this. Day one's bar was larger than 1 ATR, and even if it was not, too close to the 1 ATR channel. So this might go roaring up, but like I said, as far as the filters that I use, it's too high. I really put a lot of importance on where these prices or these setups trigger in relationship to 1 ATR. In relationship to the ATR channel. So nothing for me here on Intel. IWM, of course, we took, and if you notice, I took it in the value zone, good risk to reward ratio. So I took it in a good area, the way that I view it, and also gave me a good risk to reward. 2 profit targets today. And like I mentioned at the beginning, now that it's moved more than 1 ATR away from my entry, I am going to look for some kind of trailing mechanism. Johnson & Johnson had that huge day down on Friday, up a little bit today. Nothing interesting there. Coca-Cola, look at this. We had this huge gap up on earnings, down. Now we're moving sideways, which is good. I mean, we closed above the 1 ATR channel. I'd like to see this move sideways for a while and look for a V1, V2. This bar right here, I want you to pay attention to. See how we closed above the previous day's close? So it was up, but you also see how we closed below the open. This is a bearish reversal bar. Generally, if you close above the previous day's close, but the close is lower than the day's open, that's generally a bearish signal. So anyway, nothing on Coca-Cola, but we are back in the value zone. I'd like to see it move sideways with the V1, V2 entry. Lockheed Martin, really nothing there. We have earnings coming up. MasterCard, I did take this back here, was it? With the 1050 crossover. Oh yeah, I think it was here. The 1050 crossover, I believe we did hit one profit target, but then Friday we came down so big, so strong. We went under 50 RSI. We broke through all the moving averages, so I had to go ahead and just take that loss. Now, if I would have held it, I would have been happy, right? But I would not have been happy because I would have broken my rules. So nothing for me on MasterCard. We were above the 1 ATR channel. We are in the value zone. If we could get a couple days moving sideways, look for a V1, V2 entry. Altria, holy smokes. This is the one that got away, guys, because down here, every bone in my body was like, this is ridiculously low. It pays an 8% dividend. I know that the vaping thing is bad, but I also know that a lot of the cases were from vaping devices not made by large companies, kind of street kind of stuff. And so anyway, I didn't buy it, but look at this move up. Whew, can't buy it now, it's too high. Merck down a little bit. It did have a V2 on Friday in the value zone, so that's fine. But nothing there for me today. Microsoft, above the 1 ATR channel, came right back into value zone, starting to move sideways. I like this. right? This is really what I'm looking for. So looking for a V1 or V2, but I also have to consider that on the 23rd we have earnings as well. So that is a little, even if I had a great V1, V2, and it was right up against earnings, I couldn't take it, unfortunately. So we'll see what happens. We'll see what happens. Netflix. So here's another one of these bars, guys, where we do close higher than the previous day's close, but lower than the open. This is another reversal bar. A lot of times you get these reversal bars. If I was long here, very likely I would have gotten out because of that kind of price action. But now we're back into the value zone. We do have a V1 today. But remember, when we go above the value zone, I like it to come back in the value zone, move sidewards, and then look for a V1, V2. So I can't take this for two reasons. One, the day one's bar is larger than 1 ATR. That is not allowed. And number two, even though we have a V1, I don't have any sidewards movement. I want the market to prove to me that it's going to stop, that it's stopping going down, that it's finding some support. And the way that I look for that is for the bars to just start moving sideways. That shows me that there's buyers. So this is a little premature here. So nothing on Netflix. Nike down now. Let me take a look here. Down now. Was up earlier. Nothing there. Philip Morris. You know, Friday we went above the third ATR channel, closed below, and I believe we went above the 70 and closed back below. Generally, that's a pretty good shorting area, but Philip Morris had other ideas in mind. Now it is above a 71.28 RSI, so very, very strong. Nothing there. PayPal up a little bit today. But really nothing there. I might look for a close under the 250, back over the 250. I know that back test well. We did take that trade back here on the 10th. We closed under, back over, and we had that nice one-day trade phased out, and then I exited there. But as it turns out, probably didn't look like it was the worst place to exit, was it? Qs, of course, we have that with 520 crossover, hit one profit target today. The SPY, a nice overnight trade on the SPY, going to buy that again at the close. Bonds getting very, very low here. You know, a good confluence of indicators is when you have a 30 RSI and a 100-day moving average. We're at a 38 RSI right now, so I don't think they're going to line up. But, you know, if this can move sideways for a while, go below the 100, back above, give me a nice V1, V2 in this range. I might consider it, but not quite yet. Tesla down today, did lose the 200-day moving average. We have earnings coming up, but again, you know, we had this big march up above the 1 ATR channel. You see this, why I don't like to buy up here, because generally this kind of stuff doesn't hold. But, you know, if we could pull back into value, look for V1, V2 after earnings, that would be good. Twitter. So Twitter has earnings on the 24th. Before, that's why I put before there. This is a nice V2. We have sideways movement, we have a stab down, and we have a V2. Unfortunately, the stop loss on my V2 would be at 39.09, halfway of the washout bar, and my theoretical first profit target is the 50 RSI. So if I bought here today, oh shoot, yeah. Now I deleted that. But if I bought here today, and the 50 was right about there, you see how my theoretical risk is actually more than my reward. You know, I like to have more reward than risk, but here's the 50, about 40.31 RSI. My stop is halfway. I mean, it is a good setup. It is a good sideways movement, stab down, reversal back up. But again, with the way that I trade, I have to look at the risk to reward, and the risk to reward says it's not more than, it's not really even 1-to-1, it's less than 1-to-1. So I'm going to pass. UNH, very strong above the 200-day, nothing I can do there. Oil. It's working on a higher low V1. Let me see where the 50-day moving average or the 50 RSI would be tomorrow. So somewhere in this range, right about there. And the halfway of the washout bar would be about here. And the close there is 1122. So do I have more reward than risk? I do. It's not much. It's like 1 1/4 to 1. What is this? 1122. All right, I'm going to watch that for the end of the day. Let me quickly do some math on this. All right, so we'll watch that one to see if we get a V1. VIX down, down, down. We are getting pretty close to that 30 RSI third ATR channel convergence. So nothing here today, but it is looking somewhat interesting going forward. Verizon, nothing on Verizon. I'd like to see it pull back in the value zone. Walmart, I'll tell you, Walmart here has this high with huge ATR bars. We had a pullback. We went to a newer high with no very small MACD bars. We have a high with very strong MACD bars. We pull back. Now we make a higher high with very low MACD bars, showing that momentum is waning. We had a big day back. We had a big day down on Friday on high volume. Today we have a attempted rally, but we're right to about getting close to the halfway of that big bar yesterday. That should act as some kind of resistance. Not going to do anything with this, but the way I look at this kind of bearish, because we have the double top with the bearish divergence. We have the big bar down on Friday on high volume. Today we have an attempted rally on low volume, and it's not getting above halfway of this bar here. So I'm not going to do anything with this, but this catches my eye as a possible short candidate. Energy, big strong day up today. A higher low back in the value zone, just not a very good V2. It is a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. But looks like it's already rejected the 50 RSI. Financials, big strong day today. Nothing I can do there. We have 5 minutes. Real estate, strong, strong, strong. Nothing there. Utilities also strong. On utilities, I'd be looking for a pullback now. I'd look for a higher low V1, V2, and XLV. So Adobe does not look like it's going to close back above. USO is possible, looking for a higher low V1, but not there yet. The other options were the Google, the 1030 SMA crossover, but I'm going to let this one go because it's a false breakout to the upside. And then Facebook, very strong today, does have the 1050 crossover, which is good, but it's just too high in the channel for me to buy. So that being said, I am going to buy the SPY. We know that, and doesn't look like Adobe is going to trigger. And really the only thing here possibility wise is if Google closed back above, but it doesn't look like it's going to at this point. Let's take a look at the weekly there. So this is moving sideways on the weekly. MACD is positive. I would possibly take USO here if we have a close above, but I don't know if it's going to. All right. Hey, Murray, yeah, you're right. It, like I said, it does have a really good V2 today on Twitter. Sideways movement, washout bar Friday, big bar up. But again, when I do the numbers on where the 50 RSI is going to be, I look at from here to here as my possible reward and from here to here as my possible risk. So I'm going to let this one go. But you're right. It's a beautiful V2. It did gap a little at the morning, though. Maybe not quite a quarter ATR, but it did gap as well. So I am going to let this one go. But yeah, technically this one looks the best. Honestly, this one looks the best. Merritt says, do you do that kind of shorting, especially if you have the stock and sell it early in the middle of the large move bumps? Yeah, sometimes I do, Merritt. You know, when you're up against those big bars, when you have a big down bar and then you come up to halfway. If I was going to short this intraday, I would look. If I was going to short this and this happened like here, I would look intraday for some kind of V1, V2 intraday to get me into the longer term trade on the daily. And there's really no reason here. It's not showing really any reason here to enter a short trade. It would just be anticipatory at the very best. But this is a pretty serious double top with a bearish divergence and then the big bar down and then the attempted rally. So it's rallying today, but I think it's gonna take it a lot to get up. If I did enter the short here, I would definitely just get out with a close above the high of back here. Steve says the market moves from expanding to contracting volatility. Both are very different market environments. Yep. We don't know what the market's going to do, but we do know for certain that it's going to contract, and we do know that it's going to expand. Murat says, I entered oil again when it dipped today. Okay, good. Hey, Bing He, what's going on, bud? Good to see you. Thank you for coming. Bing He's our friend from Singapore. So Adobe getting close to over that 200, but I don't think it's going to get there. But who knows? And that's not going to get there. So it looks like I'm not going to take any positions today, guys, other than the for some reason, I don't know why, but it's not showing the time up here. That's not good. So we have 15 seconds. So we'll see if Adobe closes over. If it does, it's too late for me now. I'm not going to have time to do it. Yep. And there's the market. So we got another one in the books. I didn't take any positions today other than the overnight SPY trade. I got that. I got that at 299.99 is what my fill says. So move this over. 299.99 for my overnight SPY trade for tomorrow. And then IWM, glad that we hit that profit target right at the very top there. So 2 profit targets there. So take some chips off the table. And the Qs, we got the 1 profit target there. So pretty light, everybody, pretty light. IWM, Qs, and the overnight SPY trade. So, you know, it gets frustrating if you're light and the market just goes up, but at least you can be happy and glad that you followed your plan, because sometimes you're really going to be glad that you were light. And, you know, the reason I'm light is because based upon what the charts are telling me, it seems a little overextended, but you never know. You never know, right? So that's trading. All right. So listen, if you guys have any comments or questions, anything you want me to look at, please put it in the chat. Before I get to that, I just want to do my quick plug that I do every day and let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I've had really good success with my clients. You know, what I do here in the live stream, I hope it's helpful, but I can tell you for sure that the one-on-one lessons that I offer are much more interactive, and I think you're going to learn a lot more. You're going to have a deeper understanding. I do offer a course. It's 10 hours, 5 2-hour live one-on-one Skype sessions. So, you know, if you feel like that might be of help to you, and I know that it will be, you know, please reach out to me. My email is in the description of this video. Also has the price of the course. But you know, if you're at all interested, you want to learn more, reach out to me and schedule a Skype call. You know, there's it's just about a 30-40 minute Skype call. I kind of interview you, you interview me, see if we're a right fit for each other. There's certainly no obligation, I can promise you that. And I just like to know more about you, how you got into trading, what your challenges are, what your goals are, you know, and then if we decide to work together, if it looks like it's going to work, you know, for both of us, then I'll go ahead and put together a lesson plan based upon, you know, your parameters of how much screen time you want, whether you're going to phase, whether you're not going to phase, you know, help you with your sizes, and all your positions together, your correlation. And you know, you hear me talk a lot about having a plan, following your plan, and I think most people read some books, they concentrate only on the entries, maybe a little bit on the exits, but you really need to have a whole complete plan. And you know, if you do the one-on-one lessons with me, then I promise you I will put together a complete plan for you. So anyway, if you're interested, just reach out to me. Like I said, my email's in the description of this video, and then you can also reach out to me on Twitter. So, and then lastly, if you guys wouldn't mind, if you appreciate, or if you found what you know, this live stream, today's live stream, if it was helpful for you and you appreciate the content, I would appreciate if you would hit the thumbs up button. It does help with Google showing you the interactions, and it does, the more interactions you have, the more Google will, you know, promote the channel. And there's a lot of people out there that need help with trading, and I think if they come to this channel every day or often, you know, I hopefully they're going to learn some good things, and hopefully it will increase decrease what they're losing, and hopefully make them some money. So I would like to get out to them. So if you could hit the thumbs up button, it's just a little thumbs up arrow below, it's free, but if you do it, I would appreciate it. So all right, that's my plug. Okay, so Bing He said OLLI seems like a good start trade, but my broker has no CFD to short this. Oh, you're thinking about shorting it, Bing He? So technically we had a V1 today. We went higher than yesterday's or Friday's high and reversal back. It also looks like a V2, right? Here's day 1, day 2, day 3, day 2 washes out day 1 and closes below. But technically it is a V1 because today we went higher. I don't think I would be shorting this here, Bing He, just my personal opinion. But see how we're at a 53.18 RSI? You know, doesn't mean that we can't come down for another day or two, but that 50 that 50 RSI is going to give us some kind of support, and then this 20 should give us some type of support, and this previous high should give us some type of support. So I think in general you're going to come down here and find support. But anyway, doesn't look like you're going to be able to short it anyway because your broker doesn't have any shares. Jackson says SPY on special now at $299.99. I know, isn't that crazy? So that's the fill for today, $299.99. At 300, I wouldn't have bought it. That would have been way too expensive. But $299.99, that's acceptable. That's acceptable. So where did we end up today? So we ended up Dow Jones 57 points. Let's see where Boeing ended up. That rallied a little bit. Oh, hey, I do want to share with you guys. I listened to a audiobook. I'm not finished with it, but I did listen to it over the weekend. Steve Burns told me about this book. This is from Larry Hite. It's called The Rule, and I believe on the back, when people talk about the books, give their reviews, Steve Burns actually was one of the reviewers on the back of this book. And this is from Larry Hite. Larry Hite's a very famous investor. He's one of the market wizards, and I'll tell you what, it's a great book, guys. It is a really great book. And, just to give you kind of the cliff notes on this, he talks about, taking trades where you don't know what's going to happen, but if you're wrong small. And if you're right, you have the opportunity for a big wins. That's not a spoiler for the whole book because there's a whole lot more to that. But in general, really, that's what it's about. It's about being patient, identifying a good risk to reward setup, and taking it. Doesn't mean you're going to not lose a lot of times and lose a little. But if you're right and you can catch a big move, you have that good risk to reward. So anyway, I would really recommend that you guys listen to this. I've been listening on audio books yesterday while I was hiking, cleaning the house, and I'm going to be listening to it today as well as the TrendSpider podcast, and I put the link in the description of the chat. They're interviewing Steve on TrendSpider, and it's on YouTube. So it looks like it's about an hour and 10 minutes. So I'm going to listen to that as well. But do check out that book, The Rule. I mean, this is from one of the most famous traders, market wizards, Larry Hite, and it's interesting. What he really talks about is really what we talk about here, and that's having good risk to reward ratios. All right. All right, if anybody has any other comments or questions, please let me know, and I'm happy to answer. Otherwise, get out of here, go for a hike. It's colder today. But beautiful here in Utah. Man, I'll tell you what, the leaves are beautiful. The colors are changing. All right, well, looks like I might be getting out of here early. You guys are letting me off easy today. But I'm very happy to answer any final questions, so if you have any, please let me know. No problem whatsoever. Murat says Utah is a nice place. I like it. Yeah, it's beautiful here, Murat. I mean, I live right up against the mountains, so I just go out of my door, hike up in the mountains. There's skiing, there's lakes, you have the four seasons. If I moved, I'd probably have to move someplace like Norway, where I have the four seasons and the hiking and all that. I'd love to go to Norway. I've never been there. Hey, John, good to see you. John says, thank you, Greg. You're certainly welcome, John. I hope you're doing well. And, if you guys have any questions that I didn't answer today, feel free, send me an email, send me a message on Twitter, and I'm happy to answer them as well. So, anyway, glad that it was a nice green day today after Friday's down day. So, always thankful when we have a good, nice green up day. So, all right. So, John, thank you, sir, for coming. I appreciate it. Murat, thank you, sir. Really appreciate you coming as well. Jackson, thank you for visiting us from Australia, and I'm really looking forward to our lessons, but just as soon as you are ready and it makes sense for you with your schedule. Bing He, thank you for coming, my friend. Hope everything is going well in Singapore. Steve Burns, really appreciate you coming and looking forward to listening to your podcast or your interview on TrendSpider, and I did put that up here in the chat in case you guys would like to listen to it as well. And Kurt, hope you're doing well. Keep in touch, my friend. Really like to know what's going on with your trades and how things are going. And same with you, Jesse. I'd like to keep up on your trades as well. If you guys have any questions, now that we're done with our lessons, don't feel shy, right? Because once we're done with the lessons doesn't mean we're done. So if you guys need a brush up, Skype call, something like that, you please let me know. And Marco, really good to see you. Hopes everything is well in your country. And if there's anything I can ever help you with, Marco, you just let me know, okay? And appreciate you coming. So, all right. Murat says S&P is finally over 300. 3,000, I mean. Yep. All right, well, we'll see what happens. No new trades today other than the overnight SPY trades, so which is fine, right? You don't always have to have trades. It's important you just wait till you have the trades that you're really looking for and things move up. And a lot of times you'll wait and wait and wait and won't quite get there and it'll take off the other way, but that's just trading. But you will get them. Kurt says, yes, sir, definitely. No trades as of now. Okay, good. Like to see that patience. So, all right, everybody. Well, listen, thank you for coming. Go out and do something nice for somebody today, right? It's going to make their day, and it's going to improve your day as well, I promise. Just give a wave or say hello, hold the door open, something like that, all right? Oh, John says MAC. So, we did have a V2. Here's day 1. Here's day 2. Here's day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. We did have a bit of a gap here. We're at a 41.43 RSI. So, the way that I'm going to look at this, guys, I'm going to look up here and see where the 50 RSI is going to be, and it's going to be close to there. So that is my potential theoretical reward if it fails, and then halfway the washout bar would be my stop right about there. So you can see, if I bought it today here at the close, it gives me about a 1-to-1 risk-to-reward ratio. So me personally, I probably wouldn't take it, and it did reject the 1 ATR channel, just, another piece of information to consider. So if it were me personally, I probably wouldn't take this trade. What I would wait for, John, is I would wait for a move back up into the value zone. People that bought here, if it gets up here, they're going to have their finger on the trigger. And if it weakens, they're probably going to get out. That'll probably cause it to have a day or two down. Then I would look for that a higher low V1 in the value zone. That's where I would be looking at it. But it did close above the 10-day today, which is very good because it's been a long time. September 27th, that was the last time it was above the 10-day, and now we're below. But now we closed above the 10-day, and I do really like this sidewards movement, this base building. So just of what I'm seeing today, I probably would not buy it because the risk to reward. But what I would be looking for is a move up into the value zone between the green lines, and then a day or two sell off with now a V1 or V2, because all the people that bought here, if it starts slowing up here, they're going to get out and you're going to have immediate selling pressure. So I'd like to get those sellers out of the way, have some new buyers come in, and now the people that bought here, that sold here, now those sellers are gone and would give us most likely an easier move up now that those initial sellers are gone. Greg, I'm watching slightly delayed, but if you are there, just quickly so I can check some code I have on fake out bars. Okay, so you see this triangle here? This is something from a long time ago, an indicator that I use on Trade Navigator. But essentially, what a fake out bar means is to the upside, we have a high. The next day we go above the high and then close below, right? So it's kind of a false breakout to the upside. See how we have a high? Now we go above but close below. That's bearish. So in a way, it's a V1 to the downside, right? Here's the high. We go higher than the previous high, then close below. Now that's bearish. It should continue to go down. But the very next day, if it takes out that first day's high, so here's day one's high, then we go above and close below. If we close below, again, that's bearish, but if the next day it's strong enough to immediately go back above that first day's high, that is when it's going to paint the red bar. Let's see if we can find another one. Here's one to the downside. Here we have a low. Now we go lower but close up. That's bullish, right? So here's the low. We go below and then back above. If the next day takes out that first day's bar to the downside, then it confirms the red bar. And that was a pretty good confirmation. Let's see if we can look at one. And I don't have the code on this because it's a private code from Larry Williams. Here's another one. Here is a high. We go higher than the previous high, but then close below. That's bearish. But if the next day it can close above day one's high, then it confirms the bar. And you can see that was excellent. So essentially what these fake out bars mean is that you have something that looks bearish, but immediately it goes bullish. Or you have something that looks bullish that immediately goes bearish. But you know, we'll get into that a little bit more in lessons, but that's essentially, but I don't have the code, but it's essentially a V1 to the downside that reverses and goes back up, or a V1 to the upside that looks bullish and then immediately goes down. Yes, needs a third bar. That's correct. You're welcome. All right, everybody, I'm going to get out of here, go listen to some podcasts, go look at some audiobooks, and go hiking with Katie Girl up in the mountains. So, yep, that's right. You're right, Jackson, V1. It's V1 that fails, either the upside or... All right, everybody, have a good rest of the day. Hope you're doing well. Go out, have a safe day, and enjoy. And I hope to see you guys tomorrow during the last hour of the market. Take care, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.